All right, we're live. I didn't play an intro this time.
How's everyone
Threw you
doing?
off.
Yeah, I was
I can-
waiting for the intro.
do you want me to play a Paul one?
Sure, let's play a Paul intro.
I don't know. I should make a new one based on this. Okay, let's do the
I am short NVIDIA. Do not short NVIDIA along with me. It is very risky. I am down a lot of money. I'm okay with it. I am down a lot of money. I'm okay with it. I am down a lot of money. I'm going to tell you something. I've started a position in 3M stock.
I love it. I'm gonna have to add a new one now. So Disney has not gotten me yet for the Raiders of the Lost Ark yet. Good.
Yeah, thank God. Yeah, their AI is going to come for you, the Mickey Mouse AI. You're going to get like a chatbot.
You stole from me. It stabs you.
It's the one from South Park too. Just goes up to you and starts kicking you.
Did you ever see the Itchy and Scratchy Land Simpson episode? I don't even think they air it. It's where they created robots for Itchy and Scratchy World, and then when they would take photos, the robots would freak out and start like trying to kill you with an axe. Wait a minute.
I can see how that would be.
Old Simpsons.
Who Hat is obsessed with a hat.
Your hat?
He's just saying hat gang. He's
hat gang forever.
Gang hat. Dan Weston hat Fabio.
Yeah, this the killer robot episode. So yeah, they made fun of Disney. It was like Itchy and Scratchy World. So the robots went crazy and started trying to kill all the people in the park. So, I don't think they air this anymore. So I wonder if Disney Plus has this on their recordings, because they've pulled some episodes of The Simpsons.
Why? Why do they do
There
that?
are certain episodes you can't find on Disney Plus. So
that's annoying. You should just keep the whole thing. That's the point of it.
Itchy and Scratchy Land. So
now
Disney they knew Disney was going to own them someday. Like they had to know at some point.
Simpsons birthed Five Nights at Freddy's. Yeah.
So that's that. So we're here for that. We've been sitting on this for like a month. Like it's been a while. We were aware of it. I haven't gotten around to it. And then I wasn't gonna really make a video about it until this text. Someone shared it, and I'm like, oh shit, it's on now. They went bankrupt. Oh my god.
Oh yeah. No. I woke up to it this morning, 5 a.m.
Yeah. I was like, what a treasure. That's why it's good to wait a little bit, I guess, for stuff like this. So would we say, is this Everything Money's first bankruptcy? But he didn't say he bought the stock, I guess. So it was account or it is an 8-pillar stock though. So
it's an 8-pillar stock. He made Seth buy the stock, and he just made the claim that it was a much better investment than Tesla.
Yes. So
that's his claim.
We can look. What's crazy, he doesn't delete this stuff, which is wild. I have it all downloaded and record, and I screenshotted it because I think someday he might. But so basically, we will show you the thumbnail first. So this is the thumbnail. People, you see it? So forget hype stocks, buy underpriced companies like EBIX. So you can see on the left, it says hype, Tesla, Bitcoin, Neo crossed out. And then on the right side, thumbs up Paul with EBIX. So there you go. And then he writes, so this is January 2021. Everyone out there looking in the market say you should buy Tesla, Neo, Bitcoin because they're going through the roof. They're solid investments. So here's what we tell you. Forget the hype stocks. You should buy underpriced companies, Fabio, like EBIX. You should buy underpriced 8-pillar stocks, Fabio. Silly you for buying Bitcoin and Tesla. So there are thousands of stocks in the US. Funny, they call it a US stock, which I kind of find intriguing if you look at what EBIX is. So they go into making fun of Bitcoin more, and then if you want to go read the rest of this, then they bring Tesla into it. So you Tesla people that hate me, okay, he's making fun of Tesla, so go hate Paul if you want. So you can go compare the price chart of EBIX or compare the results from January 2021 to today. So pretty sure we know who won that. So what are your thoughts of this now that this is fleshed out, this stuff?
I mean, it's another form of evidence that he, as an investor, is entirely not analytical, but I call it the analytical investor, the analytical versus the story-driven investor. And he is the far extreme opposite of a story-driven investor, purely analytical. I'm not even sure he knew what the company did.
I don't think he did. I think he looks. We can play the video. He just talks about the numbers.
Yeah, let's actually play the video as a reaction.
Let me pull up. I have
2.5 a quarter. So,
all right, let's go for a little bit.
The Seth days before he came on my channel, and now he's gone.
Okay, hold on.
But Tesla's worth 30 times more than Ford.
so yeah, we want to find those undervalued.
Over time, it just started to gravitate towards
Okay, we're
8
gonna do it.
different things that I always looked at. One day, we just started deciding how we're going to do this process, and it came up as 8 pillars. My whole idea isn't to say, oh, it hits these 8 pillars, they have them all, let me buy this company. It's merely tell me a story. I have enough investing and business experience that I'm trying to teach everyone that we can all learn together to sit there and say, okay, based on what I see here, what are the questions I need to ask about this company before investing?
So, okay, what would you say is like your type of screening? Because so he's saying 8 pillars is a screening tool, which is, I would argue he's not. He's using it actually to make investments. But like, what would you say your screening tool is? Like,
I mean, it really does depend, but some of the things that I might look for in a business is maybe high insider ownership is one thing, but it doesn't eliminate a stock if it doesn't. Like, there's not really. There are some eliminating factors, I'll say, but
they're not strict. No, I don't think you or me would agree.
No.
They can vary. Like I can do. I showed yesterday. I have one of my software models is very basic. It's just a peer-to-peer valuation tool. So that could be a screener. You could just like Carrier. When I looked at Carrier was at a lower multiple at the time I looked at it compared to its competitors, and that kind of was intriguing. So that's like one way I can look at it, and it's like very basic. It's like P ratio, profit margin, stuff like that. Just quick comparison in the industry.
I think you could first start with what sector, what kind of company are you looking for?
Yeah, and I know Paul never talks about that, but like he just said, "Oh, good profit margin." It's like, okay, what sector are they in? Who's their peers? To me, I'm like, what do you mean 20 is good or 30 is good? What does that mean? Like,
and then I think I remember telling you, I don't know if he mentioned it in this video, but the profitability was going down. Revenue was going up, profitability was going down. A huge increase in expenses of the cost to sell.
Mhm.
So, yeah, I don't know what that was about, but that would have been a huge red flag. A sudden massive increase in 2021 from 2020. So
let's wait till you see the numbers he's talking about.
I can do that. Now, based on what we're doing right now, I believe there are 22 companies in the United States over $500 million in market cap that qualify and get all 8 pillars of the check mark. I exclude all utilities, all banks, and all energy companies just because I don't understand how the financials work in there. Oh, and insurance. But the 8 pillars are merely used as a way for me to sit there and say, okay, let me now start doing a deeper dig into this company.
He didn't get
So we decided to do was Seth had a good idea. Paul, let's pick an 8-pillar company that hits all checks that nobody even knows about. Now, do you want the list of all companies that hit the 8 pillars?
Don't spoil that yet. We'll leave that to the end of the video. Here's the point, Forks. I know this guy, everything he said might seem pretty confusing. Here's the point. While all of your friends are chasing down those hype stocks that just keep rising and rising and rising, and you have no idea why, The idea of buying high and selling low is not investing. You want to buy low and sell high. So let's not chase those. Let's find companies that are currently undervalued
because they're overlooked.
So we can,
and then wait till
diamonds in the rough. That's right, Paul. Diamonds in the rough that are undervalued, so we can buy low and then make a huge profit on them. So
and one of the most common questions I get is,
go ahead.
What if they're never ever found? That doesn't happen. Your goal is to buy 20, 30, 40.
He would touch him and then he'd touch him right back.
Okay, so he's claiming these are undervalued. So we'll find out why they think EBIX is an undervalued stock, apparently. So this will be fun.
Companies that all fit these certain metrics. Because at the end of the day, you'll be wrong on several. You'll be really right on several. And a lot of them will perform the way they should perform. People will get attention. Right now, the markets are up a ton because of hype stocks.
Right there.
We're trying to find non-hype stocks. That way, when the hype stocks start to fall, people start going, wait a second, there's cash flow here and cash flow here and cash flow here and a dividend here. Let me go pay attention to that one. That's the whole goal of value investing. That eventually,
that's what you were talking about. He changed his mentality completely.
I know.
Dividends good, dividends bad.
If people actually like watching up, his videos from 2-3 years ago, like he's totally different now. Like he's like pivoted into like random like topics and
to be worth what it should be worth.
So by the end of this video, you're going to know
insurance cloud provider. They provide software for insurance companies. Now, here's how much I know. You haven't heard of them. I messaged a friend of mine who's a big insurance agent in Akron.
Okay.
And I said to him, "Have you heard of EBIX?" And he said no. So I liked hearing that because I'm like, okay, well, there's maybe some room for growth in this company.
Wait. Your friend works in insurance. You asked him if he's heard of the company, and he said, "I don't know what you're talking about." And you said, "That's awesome." Like,
guys,
what?
Yeah.
What the?
I shorted Amazon because everyone heard about it.
Who does that? Then maybe you're like, okay, why don't you know about EBIX? If I think they're the shit, but you work in insurance. No. He's excited though.
I'm gonna ask my some people that I know who are in cybersecurity, and if they know the name CrowdStrike, I'm shorting it.
It's like, guys, I want the cybersecurity firm nobody in cybersecurity knows about.
Yeah, that's the one you want. The shit co.
Yeah.
Have you heard of actually? No one in here might work in cybersecurity. If you do, you have to play a game with me, but let me know if you are anyone. You have to be honest that you don't look this up, but we'll continue because I want to know if they've heard of this company.
Okay.
They provide enterprise cloud e-commerce solutions for insurance, finance, and healthcare industry.
All he did is
the firm generates blah, 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 blah. Okay, they're located in Georgia. They're only a $1 billion company.
Right?
So their market cap is $1 billion. This is sort of what
he's also wrong about Georgia.
Yeah.
I think that's their US headquarters.
Mm-hmm.
They're an international company. And I think that what are they originally from Israel or India?
I think India. And then this guy bought it. Like in their filings, it says I think 70 to 80% of their revenue is international. So Paul missed that part. Yeah, in the filings.
This is sort of what the world thinks the company is worth.
This is my price for the company. I don't care about the share price. I care about the market cap of the company because the market cap is the number of shares multiplied by the share price. This is what matters to me.
What?
Our pillar number 1 is PE ratio, folks. We want this under 20.
Really.
And we have 12 here.
Beautiful.
The next pillar.
Pillar number 2 is profit margin. We want that above 10%, Paul.
We have 16% here.
What is that? Above 10% good, under 10% bad profit margin. What? Like based on what? Is that good or bad? Like,
so Amazon shit, Walmart terrible,
Kroger shit. Yeah,
Target.
There's certain sectors the gross margins suck. Like what an idiot statement. Like.
So we already have 2 check marks. As we said, all of these are going to be check marks, but 16% profit margin quarterly, pretty solid.
Pretty solid.
Yeah, and they do pay a 0.8% dividend. So on $1 billion value, they're paying roughly $10 million a year on dividends.
Pillar number 3 is revenue growth, Paul. Obviously, we want their revenue to be growing over the past 5 years.
Look at this growth, Uncle Seth. 265 to 580. Now, whenever you see a lot of growth in something,
Okay, wait. Okay, that's not okay. That's not. I thought that was like quarterly. It's like annual. It looks like. But I don't know what the software is. Is this the original? Or this
Yes,
is
this is the original. Yeah,
Oh, okay.
I already saw.
you
this
want to make
video.
sure it's not done just through acquisitions. I want to make sure that the company is growing internally from its
He wants to make sure the company's growing internally. So this is important for people. He wants to make sure the company's growing internally, people. Okay.
own methods of business development, having more salespeople, doing more advertising, etc. Does that mean acquisitions aren't good? No, it just means that fundamentally the business should be doing better on its own without acquisitions.
Pillar number 4 is profit growth. We want the profit to be going up. Paul, go ahead, show us the profit.
79.5 to 97, check mark. Now I will say this, that's kind of weird to me. Why is their revenue up over double, but their profits only up 20%?
Can you go back in the video a little bit? Go up the income statement because I can point it out. I don't know why he doesn't just look.
Right here.
It would be right there. So go up a little bit more before when they were closer to the revenue.
Did they show?
Now, because they showed like a zoomed out. Here we go. So you can start by seeing, okay, so let's kind of do it this way. So you had the net income that way down below. And let's just go at pre-tax income because we'll start there because we can't see the net income. Pre-tax income. And okay, so he's making that point and he goes, oh, what's going on? So let's go to operating income. Is the same anomaly happening in the operating income? No, it's growing. So that means the change is happening below that line item. So let's go down and I already see it there. It's non-operating interest expense. What the hell is that about? That's a big growth. Went from 3 to 42.
Oh my God.
And then net non-operating. So that's the net between the two. Yeah, you'd say, what the hell is going on there? That's one thing he could have done. And then going up to the top, we also saw what's that, from 50 to 160 in sales rep. So sales doubled. He's saying sales doubled, but he forgot to also see the SG&A expenses. What I told you when I was looking at this company, look, SG&A expense went from 63 to 160 in a time where revenue only roughly doubled. So it's these expenses, they're going up. And then there was so he's confused because he can't read. That's what I have to say about that.
Go ahead, show us the profit.
79.5 to 97, check.
That number going down.
34.67 down to 30.5. So jiggity check in the house.
Took that out of the
What that means,
software
folks,
now.
is
You
they're
know,
not
you can't
diluting
put
the
share
shares. They're
count.
not selling off
Yeah.
more
Not even
shares,
in
and thus
there,
your
but-
shares worth less. They're actually buying them back.
Correct. I'll give my analogy. Let's say a company has 10 shares
Okay, that's kind of weird. Like that would for such a small growing company to be buying back shares like that. It's kind of odd. Like
A lot of these companies can do like token buybacks or token dividends.
mm,
To,
but like that's a pretty good clip of share buy. I don't know. That's
well, I'm wondering, they were probably
why aren't they focused on growing the company?
here. I can probably figure this out in a couple seconds. I have a hunch as to what happened. Yeah, that answered my question. Yeah, the debt got wiped out recently, but they piled on some debt.
30.5. So jiggity check in the house.
What that means, folks, is they're not diluting the shares. They're not selling off more shares, and thus your shares worth less. They're actually buying them back.
Correct. I'll give my analogy. Let's say a company has 10 shares outstanding.
A confusing thing that normal folks like
Super
yourself might
confusing.
have heard.
8.33% now instead of 10%.
Make sure you are tickling that thumbs up, pretty please. Paul has to pay the
Free cash flow is cash from operations less your capital expenditures. This is the money the business can use to pay dividends, buy back shares, make acquisitions, and do other growth things that the company's going to do to make your company, your investment better. So we look at the last 5 years to determine what's the average. Here in year 2015, they did 48 million minus 17 million, about $31 million in free cash flow. And last year they did about 48 million. So 31 plus 48. In between, let's call it 77, 66.
Yeah, big changes in working capital here. Let's see. Okay. There.
71. This check and go, oh, a fast growing company.
Okay. That's most of it. So now we get to the hilarious part of Hindenburg, who did this. Let's see. So like a year and a half after Paul's video. So the summary of the EBIX report. So first thing, Paul said it's an American company. Basically, he said nothing international. It's actually a headquartered in US, but it's a conglomerate of mostly like a lot of international businesses, mostly India, from what I can see. So what other things did Hindenburg highlighted the interesting owner of the company.
Oh, he's very eccentric.
His panache, I guess. And then they actually highlighted, which is funny because Paul in the video said that he likes companies with internal growth and not through acquisition, but he bought EBIX, who went on an acquisition spree.
And that's how they grew revenue, right?
Completely missed. He completely botched his whole thesis that he didn't like companies that grow through mergers. But that's all this company's done. So I went to the 10K. You could literally just type freaking acquisitions and it pops up. So 27 since 2017 is what Hindenburg found. Oh, what else? I don't want to read the whole thing. EBIX had 643 million in debt.
This is what I
February
saw.
23, and only 75 million in cash. So kind
of because when I looked at their financials, I saw I went to their balance sheet, and then immediately what stood out is the long-term debt went to zero in 2022, and you're like, where the hell did this go? It went to obviously the current portion of long-term debt. So current portion of long-term debt now stands at 615 million.
Oh my
God. Yeah. So then it's like, whoa, look at all that long-term debt. So it just went to zero. And then you just look above and you're like, well, the cash didn't go down, something.
So they'd buy a company and then they'd spin it, then they'd IPO it, spin it off. Okay. Yeah. Astonishing 71% revenue growth, which Paul just was okay with. EBIX has dozens of businesses, and revenue growth the last 2 years driven by segments of its EBIX Cash, called Payment Solutions, which sells Pyramid, or primarily prepaid gift cards. Oh, that's great. Oh, what else? Did you see? Oh, yeah, like I said, this is in the filing. This really complicated corporate structure that's concerning. I saw that in the filing.
And most of it was from India.
Yeah. Again, he just said it's a US company. That's all he said in the video. So there's his 8 pillars, I guess, failed that part. He should add a 9th pillar for ownership. So
that'd be too complicated for him because he would have to have like a braiding system. Too in depth. He doesn't want to know his companies like that.
So he said it's a cloud solutions company, and then he's like, they're talking about like they sell a gift card. They have a gift card company. Paul missed that, I guess.
Pull up Christian's comment because, like, yes, no, this is true.
There's no way. Obvious. There's no way he reads ownership structure. Like, I like anything small IPO SPAC. Like, go look at the ownership structure immediately. Like, there's no way he did.
We've caught him so many times where he doesn't even know like the current news story revolving a company he's investing in. So
Yeah, he didn't know the lawsuits about 3M before he bought it. That's a fact, people. He did not know about the lawsuits before he did his video on it. People were all in the comments, and he never. I don't think maybe later on he expressed it, but
there was a video that he made about the lawsuits.
Again, it's like a lot of the businesses are in India. This is not an American company that he implied. So, oh, look, they went to the offices. That's cool. And there's nothing there. Oh, look, a storage unit.
Dear God.
Oh my God. What is he doing? This is what happened. Like, I don't even know what to compare him to. He like looks at the numbers in his software. He decided to create these 8 pillars by himself because I doubt anybody's input mattered to him when he said that they created it. It's more like he just talked in a room and everyone else was sitting there.
Look
so
up Julius's comment because this is unrelated, but it's pertinent to the person. Paul said American Express is just a credit card company.
Oh,
yeah.
But like this is crazy to have this like all these businesses. And oh yeah, here's EBIX. I remember this, probably read. EBIX had 7 different auditors since 2004, including several who resigned or did not stand for reappointment.
Wow,
Classic
look at
hallmark of accounting irregularities.
KPMG resigned.
So part of my Plug Power thesis of why I shorted it was because they had problems with their accountants and they sued them. Actually, Plug Power sued KPMG over their audit. So I was already like on them, and then that hit. I'm like, oh my, okay, it's on now. Like there's something wrong here. Like, who sues their auditors like that? Because they disagreed with some of their valuations, but God. Yeah, and then I should say to one guy you mentioned, J Money, I think it was, or no, not J Money. Is it J Money? The guy he's a CPA, I think. His freaking channel name is so stupid because it doesn't come up. No, it's not him, I don't think.
What was the commentary?
Did he do Black? It was Black and Decker.
Yeah, he did. He did Stanley Black and Decker.
He did Stanley Black and Decker, which had accounting problems, and he's supposedly a CPA. And he failed to mention the accounting problems that they had before he decided to value it.
Well, this guy's also a year-to-date, bro.
Yeah.
He has the portfolio performance. Yeah.
Yeah. Let's see. So there's the Hindenburg report. People can go read it. Freaking hilarious.
Wait. Julius says that if you look at their EBIX video, the word restated was under every year.
Oh my God.
Oh my gosh. I missed that. In their software?
Oh no. They did do follow-up videos. So they did I can't believe they haven't removed this stuff. This is so bad. So they did the initial video that we watched, this one. Then they did a video highlighting some of the problems that were coming up with EBIX. So they did another valuation with the 8 pillars. Then they did another update video.
Wait, can I see what the value they came up with was?
Oh yes.
I think that's super important for me. I need to know if I should buy it tomorrow.
Oh, he didn't show it. Did he?
Oh, it was there. It was there. Somewhere. Yeah, he's still doing the calculator. Look, he's doing we don't have volume if you wanted us to have volume.
Oh, I have to present. Damn. It's always why is it like that?
Caleb, they don't have financial backgrounds. They just supposedly have or come from money.
Videos on Alibaba, and we were.
And margin of safety is earned. I start with 7 years of analysis. I'm going to do number of assumptions. I'm only going to do 2 of them. You can do 1, 2, or 3. It's going to show you the revenue growth over the last 10 years. Let's be conservative and say 8 and 12%. Share change, let's go with 0.5 and minus 1% or minus 1.5%. Profit margin, okay, 8 and 12 also. Free cash flow margin, we'll go with 8 and 12. PE, 12 and 15. Remember, guys, this has some scandal to it. Now, desired annual return. I usually do 12.5%.
This has some scandal to it.
If
Let's
you can
put
invest in
market
ETF
average
and get
multiple.
10% over long periods of time, like the market does. I
You
want
see what he
some
did?
sort of benefit
Yeah.
for picking individual.
This has some scandal to
You
it.
do
Market average
12.5%.
multiple.
Oh, what's your question?
Wait, let's see it again.
Remember, guys, this has some scandal to it. Now, desired annual return. I usually do
He thinks
12.5%.
being really conservative with that multiple.
So people probably brought this up. He did no research into what they were talking about. He would just say, "Oh yeah, there's people that are concerned out there." Probably has no idea what they're concerned about.
Do they have growth potential?
I love
I've
his
only asked
tuna
for
face.
the revenue growth on
He
the
has the
highs and
biggest
I
tuna
might
face.
adjust
He
it
goes-
a little bit higher.
Higher?
Yeah, maybe.
Do they have growth potential?
No, but it's also the face. Like
He
he's,
doesn't
he's,
know
like,
$1
he's
billion
really
in revenue
scared to
already.
ask him a question.
Plus, remember,
Okay.
Bo brings up a good point. I want to be conservative, especially with all the scandal around them.
Yeah.
Paul-
Well,
Be
that's a
conservative.
Right when he
point.
said
Good
Mo
point.
has a good
Yeah.
I hit
point
the analyze
off
button.
camera, Mo was like,
Wait, how do you analyze it? You just stop. Like, you don't analyze something like, right? Scandal.
I've already seen the price back there. Oh my
Yeah,
god.
look at this,
Is that a
guys.
60?
Interesting. That's probably why it was a little book.
Yeah.
So, guys,
83.
80.
Guys, you missed out. It's a buy. What are you talking about, guys? Buy it.
Even on the low end. Damn, 30 current price 38. All right, guys.
So remember, it's got scandals. So be aware. Let's analyze this bitch.
Look at Christian's comment because that's true. He added a 5% margin of safety for the scandal.
Did they teach you in college the scandal discount on valuations, Fabio?
Yeah. They told us it was 5 to 10% discount. Because you know when there was a scandal with a waste management, the stock only went down 5%.
Oh, that's where it is.
Yeah. So you just discount,
Is this-
5% additional, you'd be fine. It's not, they don't go down like 50, 60%. Luck and Coffee only went down 5%.
There. Yep. Look at this, Fabio, the teacher.
say go out and buy it tomorrow. No, still do your research. However, if you believe all of this and you like the research,
And you don't
of
believe the
company,
scandal.
I think it's a buy all day today.
Yeah. So RSM dropped them.
So he literally knew, he knows supposedly the scandal, and he still analyzes and says, if you like the number, buy it.
He just said RSM dropped them.
Yeah.
wonder who picked them up. I wonder who they hired next.
So whenever there's scandal, you need to do more research.
Yeah.
But guess what, guys? When there's more scandal and more unknowns, that's where there's an opportunity to make more money.
True.
Or
You
lose
can't
money.
be serious.
Or lose
Or
money,
lose.
but it
You can't be serious.
That's why he buys Chinese companies.
Oh my God. Please, people, if you know anybody that likes these people, show them. They haven't deleted this yet. Go show them this video. Oh God.
This is
Man.
a wonderful face for Paul. This is a really good face for Paul.
We should play that party guy. I love that.
so whenever there's scandal,
Wait,
you need to
that
do
other
more
face was
research.
great too. The staring face. He went. That one.
Yeah. So RSM dropped them.
He
I wonder
does
who
the
picked them
best faces.
I wonder who they hired
So
next.
whenever there's scandal,
Mo.
you need
It's him. It's
There's
him.
the face.
Oh, him. The tuna face. Yeah.
Next time I'm on stream with Jesse, he'll ask me a question. I'm just like,
more.
does
Yeah.
know
But
where
guess what, guys? When there's more scandal and more unknowns, that's where there's an opportunity to make more
opportunity
money.
for bankruptcy.
Or lose money.
Or lose
Or
money,
lose.
but it's
But
about
Lose lots of money.
or lose money.
Guys, scandal leads to opportunity for you to lose money. But
that's what value investing is about, is go do your research.
okay, people, like when there's scandal, like you should run away very fast, very, very fast. Like, holy shit. I can't
I don't
believe
think
you-
Paul knows what value investing is.
Yeah, like it's not very value investee, is it? Like finding plague-written scandal companies and saying, well, if the price is right in my software,
It's
8
not even a cigar.
pillars.
It's not even a cigar butt. It's like a debt-laden company.
Scandals are like accruals for lawsuits. Make an estimate and then take the lowest number to forth. Oh my god. I'm gonna change my name on Discord. 5% scandal march to safety. More scandal, more alpha. There you go. You learn something every day.
Oh, for real?
You know it's a buy. Little John says, yeah. Okay, let's see. 5% discounts enough for fucking 3M. It's an app, says. Okay. So it's like great. This is crazy. This is crazy. This man.
Figure out what the actual issues are. Were
And
they
go
as
listen
bad
to their
as the
conference
market
calls,
reacted?
because they're going to be talking about this on conference calls.
100%.
You're right. They just had one, and they're accused of falsely portraying the finances, operations, and internal controls. So, were people trading this in minutes? If you're interested in trading, you like charts, the candlesticks, or you're new to this, you can trade this at a quicker pace, and Mo will show you how.
So I'm going to show you a couple ways to do this. This is the first way from a swing trading perspective.
Oh,
And
here
this
we
is
go.
a daily chart. So this is a daily stochastic. It tracks the trend of the stock going on a day-to-day basis. So looking at this, I'm looking and saying, okay, well, we were making a sweet spot reversal going to the top. We had really good buying volume coming in. We broke through the 200-day moving average, and we had great engulfing candlesticks going up. And this is the point kind of where you start taking profits. And if we switch it over to a line chart,
I really don't understand why this brings any value
Well,
anymore. I really don't understand. To the fucking day I die, I don't understand why this makes any sense.
because I can go back in time and buy at that bottom.
Because every time they explain this shit on videos, they're like, okay, well, they draw lines on things that have happened in the past. If you bought it here and you followed this line and you did the hoop-de-doo, then you made money. It's like, okay, cool. But you didn't make money. So I don't know.
little pullbacks. What I like to, I do think this one will probably come back to the 200-day moving average. This is also a great stock to do 15-minute trades on because the beta is rather high. Beta gives you that little bit of volatility in there. And if you would have looked yesterday, as soon as you're over 80% going long, you have great engulfing candlesticks. Exit your position when you drop below 80% on your short-term daily 15-minute stochastic, and that's how you do it. It's very easy. So if all of what I said is gibberish to you, come join the Bid and Ask Nation. You get access to me. You get access to all my training 101 videos.
I can't imagine being the son of a doctor and this is what you do. Like, I don't know. My dad sold cars. Like, can't imagine if my dad was a doctor and I turned into this type of dipshit. Like, this is what you do. Like, I don't know. Like, fucking crazy. Like, and he was supposed to be a doctor, right? And then he's like, no, I like investing and I'm gonna draw lines.
You should have stuck to that, honestly.
So, anyways, so what do you think? Are you excited?
I died a little bit more inside. Every day that I see anything about everything money, I die a little bit more inside.
So this is the video. Oh, this is I found this while we were at it. So they still kept this up.
God,
Love this. So Seth was invested. We got to talk. Can we talk to him again somehow? Where is he?
I know. I think Echo still has contact with one of the guys that's really close to him.
So before Seth met Paul, okay, he says it right in here. They actually did a video. He had Amazon, Tesla, and Bitcoin before COVID. That was basically what Seth owned before fucking COVID hit. That's what he had. Spoiler alert, he'd be a millionaire. He said it before. People like he was going to be a millionaire if he just kept his investing, if he hadn't met Paul. And then Paul made him buy a bunch of these value dipshit stocks. Cost him millions of dollars. So I can't believe Seth stayed around after that. I can't believe Seth didn't just like leave immediately. I would have been so mad. Like, but Seth, if you're watching, you were fucking right. I know you're not watching, but you were right, Seth. All right. The whole time. You're not right now. No, you were right back then. And you were right the whole time. So
maybe you were right for the wrong reasons, but you were right.
yeah, but you got to the promised land if you just never met Paul, I guess. It's a shame.
Yeah, you would have had. Oh man, I can imagine. Yeah, because that's $1 million back then. Or
Mhm.
actually, no, Tesla. Oh no, he had Amazon. Oh no.
He was like so right. He was so right. But
Oh, I see it right there. He was investing in Amazon, and Paul pulled him away from that.
mhm.
Would be valued at over $1 million today. Oh man.
I feel so bad. I'm just like Paul's ruining everyone's life around him, but he thinks he's like teaching something valuable to them. I can't. I don't know. But
And I love how in this video he's like telling Seth has to say to the camera, "No, I'm happy I didn't make that million. I'm so happy my life is so much better without that million."
thank you. You're teaching lessons, Paul, so I can stay broke forever.
Oh my god, it's kind of culty a little bit.
I think yeah, he's probably wrapped himself in that Ohio town he's in, and all these yes people maybe. So
Oh,
look at this. Oh, this is EBIX investor relations page. Look at this
disgusting.
disgusting fucking overlay. Look at this. Like this is
The
something
cloud
like
company, bro.
15 years ago. Yeah, this is supposed to be a cloud company, and this is the friggin' investor page. Might have been concerning, but so fast growing 2017. Ooh, that's cool. So bankruptcy. So
What Andrew just said is really funny too. That's the summary of it. Imagine convincing someone to sell Amazon, Tesla, and Bitcoin to buy EBIX and Baba. Wow. And Dex Roggle.
wait, what's
No,
Roggle?
No, it's
Oh.
because Andrews accidentally said Roggle instead of Raffle.
Oh, I'm like, is Roggle a thing?
So now, no, we're gonna make Roggle a thing. Roggle's a new thing.
That's
roll on ground laughing. Roll
like
on
it.
ground laughing. There, Roggle.
Guaranteed Paul never looked at EBIX investor relations page.
Paul doesn't even know what Disney does.
So here's let's do the 10Q.
Roggle.
10K. Let's type ownership. Let's see. See if it would have come up with any when you found it. Yeah, there's no way he read any of this. So acquisitions. I spelt it wrong. Oh my god, it's late.
My brain.
Yeah, acquisitions. Like he you would have found these in the filings if he had looked. Oh, I don't know. I don't think we need to go through EBIX's investor page.
I think the point has been made. We're beating the dead horse.
Yeah, but I have more portfolio reviews to do at some point.
Oh, I'm so excited for those.
I got 2 more. I should search, make sure if there's more. I found 3 total where he actually said what he owned. And I mean, you covered one of the other 2 when you did the intro.
Oh,
well, some of them, I think.
I think that intro for Strongman is hilarious still.
Yeah. I can't wait to compare his other portfolios to the market. And then we can, maybe you and me can do the Amazon one where we go through the articles he wrote about Amazon. And I have his comments on other people's Amazon articles, like 10 of those, which are funny too.
Do you have the Everything Money intro video I made for Strongman?
No.
I need to
Can
find
you
if
want to
I
play it?
Yeah, if you can find it on his channel. Because I don't think I have it saved. I think as soon as I just have this picture of him. Yeah, I don't think I have it. Oh, damn. And once I gave it to him, I think I deleted it.
Didn't he do an intro contest video for it?
Yeah, it'll be in there.
Intro contest.
Yeah, I don't have it.
Wait, yes. Okay, hold on. Should be in here, right?
Yes.
Let's see. Strongman. Okay.
Fields in human history. That's right.
Because those guys are all salesmen just trying to make their own buck. But they don't blame it on them. You're the one letting them do that. Go learn for yourself. Be smarter than them. It's very easy to be smarter than them. Those guys on Wall Street are salespeople. They're not investment guys. They're not investors. They are salespeople. And there's a lot to be said for salespeople.
Hell, you want to do $500 for 1 hour, and if you want to do a real estate deal with Paul.
Oh my God, remember that? I totally forgot.
Yep, they deleted that.
$1,000 real estate consults. Oh man. All right, next one.
It was that one.
I think this is yours next.
Personal finance. Are you ready? Are you ready?
I'm Paul. I'm a value investor. Return on equity is assets minus liabilities. A lot of
Oops.
this conservative again. Stock is currently at 182. The low price is still higher than the current price. I'm a buyer.
Oops.
I'm Paul. I'm a value investor. But the real true investor is the one that does well during a bad time. I have BABA, Carnival Cruise Line, Farmers Bank, HPQ, Intel, Facebook, Miller Knoll, Sleep Number, Smith & Wesson, Steelcase, GDX, GDXJ, and Walgreens.
Oops. I don't pay attention.
So you never know who's naked, and I rarely say too hard.
I think my dad finally feels I'm not a failure.
I think so.
Because of everything money, you think?
Yeah, probably because of everything. No, everything money, he thinks I'm not a failure.
Jesus Christ. Was not ready for that.
I threw that in there because that's who he reminds me of.
Oh my God.
Literally, that's who he reminds me of.
Oh, good stop. Look at his face. Oh God.
Oh no, yeah, that's my favorite face of him.
Oh my God.
I love the part where, yeah, the oops. I don't pay attention.
His head, it was incredible. I'm just sometimes sitting there in awe.
Oh, zero margin. Of course, of course it's going to be zero.
I'm probably smarter than you, so it's okay.
Jeremy, you talk about.
Oh my God. Remember when he said that? I remember that now.
They deleted that video. That
Oh, they
video's
did?
gone. Yeah, they deleted
Look,
that
I'm
video.
smarter than you. It's okay if you don't know it. Oh, yeah.
Transparency? When did you let everybody know you're being paid every month by whatever stock was trying to have you pump and dump? Not gonna lie, guys, he's a lot more value oriented than he portrays on the channel.
I am very lucky to have that guy in my life.
Oh, here's Cole. This is Cole's.
Merry Christmas, little fella.
It's Santa Claus and his elf.
We're not gonna hurt you.
No, that's some nice presents for you.
Good job, Cole. All right, what's
Those guys are all salesmen just trying to make their own buck. But they don't blame it on them. You're the one letting them do that. Go learn for yourself. Be.
Look at all of our patrons' amazing success stories.
I'm Paul. I'm a value investor. Return on equity is assets minus liabilities. A lot of
What's yours again?
Everything money, you think?
Yeah, probably because of everything.
Oh, they're just playing him again. So, because you put that the background. Okay, I could hear it. I'm like, what is that?
Yeah. I even made some memes back in the day that I think were so mean. I gave them to Strongman. Says, "Here, you can post these. I can't post them. They're too mean." The one of Voyager Digital that Strongman posted, that was me.
Oh,
That meme.
Oh, look, he was so excited about the he was like so excited about the settlements and all that. And look at him. Yeah, man, buying 3M. So excited. He didn't even know he didn't know the particulars of the lawsuit when he bought it. And people were like harassing him in the comments, like, what are you doing? Do you know about this?
The Generac one was probably the most gains he's ever had in his life in a single stock.
Oh my god, can't stand it.
I love it. If you put everything money, I saw the strongman video. That means he gets through the algo. I think he's the most famous small channel on YouTube and YouTube Finance. I think Strongman is the most famous small channel.
You think so? Well, they all know him. So. They all say they don't know him, but then when he mentions them, they all flip shit. Like when he mentioned Finance Junkies, they responded. They posted like the thumbnail he used like right away.
Really?
So, yeah. Then they changed it when they went live. So they said they were going to address what Chris said, and then they chickened out and they never said anything. So
I did not know this.
Yeah, they like reuse his thumbnail. Like, oh, we're gonna do it.
Does Chris know this?
I don't know if he does. Well, remember Chris Patel responded underneath like, "Oh, we'll discuss this," and then nothing, crickets. So, like for you guys, like for them listening, it's like if you associate with Lafufu, that's on you. You did it. Like Strongman's gonna come after you if you bring Jeremy Lefebvre on your channel. Like he's coming for you. Like you're a target now. So.
Oh. Echoes from above. There was an echoes from above.
Yeah. Just expose themselves. Oh, yeah. He was so excited to buy PayPal like yesterday. Or was it today? I don't remember.
Well, that's 14 hours ago.
Yeah, okay. Today. It's like, okay, good luck to you. I mean, do you enjoy the PayPal hate? I think you enjoy it. I think it's your favorite hatred. Or Baba or PayPal hatred?
Baba, because I'm the petty person that did I show you the Seeking Alpha comment one where the guy told me like 3 years ago when I was criticizing Baba was at really high prices back then, and the guy told me you should stick to index funds because you don't understand this.
Oh yeah, I remember that. Yeah,
and I waited 3 years. and I asked him, "Did you buy index funds?" Yeah.
Well, you've helped me because I want to attack every person that I think is an idiot, but you're like, no, wait for your moment. So I'm like, there's some certain yield max people. I'm waiting. I'm just gonna wait. Maybe it's a year from now, but I'm gonna wait. And then I
was waiting for my moment. Someone took my moment from me because I was waiting on my ELS video when I was talking smack about it. There was a guy that kept going back and forth with me, and let me see, because when I checked, I couldn't find it. But no, it's Nautilus. Oh damn, I have to find it because I don't think I. Oh no, never mind. I did. It was in one of these, so I'm gonna open up both in like a new tab and then see. Hopefully, he never deleted his comments because then I shall relish in my comment to him. Okay, so his comment was not in this video. I have a decent memory, so I'll know. I'll remember someone's comments.
That's hilarious. Oh.
Damn it! No, the person's deleted all their comments now.
I'm with you though. I can't like what is with the fintech love? I'm just like I don't get it. I don't get it. Like it's like the equivalent of a bank. I don't see what's so interesting about them. But
well, it has tech in the name, and you don't want to buy tech because tech's too obvious. You want to be fancy with your investing. So you go for the next best thing, fintech. Because millennials and Zoomers are underbanked, and
you know what?
Fintechs are going to bank them. And
Let me take a scalp while I'm at it. Wait, we're okay. Damn it. This is what I get for being up so long.
Check out button investing, bro. Yeah.
Do you remember this guy during the stream?
Oh yeah.
This dipshit who thought he was so funny and clever, saying how great PayPal was, and we're all clowns because we're not growth investors. So, like, you're a growth investor and you're telling us you buy PayPal. Like, that's what you're telling me.
Well, he's not. He's just a follower.
I couldn't believe. I'm like, yeah. What was his comment? Index funds are great for someone who is looking for a growth. Was it index funds are great, but for someone who's looking for growth, an index fund is not appropriate. Are you kidding? You fuck. So I responded, but it's like, what is wrong with people? You can be a growth investor through ETFs, like, if you want to be. So
Big pharma show. Nice fun.
Yeah, what's your response
to a big pharma show?
I don't
know. Because I'm feeling confident. I'm bricked up on this gum.
Bricked
up.
Oh my god. So again, I really want to. I want to fucking throw this in his face if I ever see that guy. So again. So who's the better growth investor? I mean, there you go. That dude, a piece of shit. But anything else you want? Any parting shots?
Sorry, I'm just laughing because Big Pharma show bricked up on orbit, spearmint on God. Oh, I forgot what this flavor was. I've had it for over an hour now.
Bro is, oh my god.
No, it's not hot gum. But no,
we have to believe though, like Andrew's, like the comments are going after Paul. You have to think some people are getting reached by you and Strongman, maybe mine.
Oh, 100%.
Generally,
yeah, it spreads too. So it's not just like people who watch our videos only are the ones who are getting that information. They see the videos, they say, oh yeah, these guys are morons. And then they go out into the internet and then they explain to other people why these guys are morons on their own. They may or may not share our videos, but they share the message. And then, I mean, if it's true that they are morons, then the argument stands on its own. If it's a truth, then the truth stands on its own, and other people will see it.
Like, I'm like, how do I explain how futile everything money's what they're telling people to do? How the futility of doing investing like that. So I'm like, okay, let's be. At first, I'm just like, don't do it. Now I'm like, let's specifically go after his portfolio and tear him down because people won't just believe you. So fine, but
that's, I think, the best approach.
I'm just like I'll say this till I'm red in the face. Like, you won't be successful as a retail investor doing what Paul's telling you to do with that DCF chart. Like, a lot of my best investments are not based on a DCF or a free cash, whatever you want to call. Like, there's way more to it than that.
Well, I slap 30 P's on everything. Yeah. That's how I do it, Jeremy style. Christian's right though, because I know I'm gonna call out Andrew if he's still in the audience. Andrew, you're super guilty of this. You hate watch a lot.
I have to believe like a lot of it's hate watch and bots. A lot of bots in their comments, maybe, and I don't know. Maybe it's just people bored. But like, why would you even waste your day listening to their bullshit? Like, just so much wrong. The constantly evaluating the buy price of a company, like every 2 weeks, reassessing the buy price. I'm like, what are you doing? Like,
yeah, well, they post every single day, right? And multiple times a day.
But only they film once a week, isn't it? So
yeah, they film just a ton.
That's not a good way to do it. Like, then you don't know that much information. How dare you accuse me of something? Well, I'm like, I have my Peru channel now, and Andrew just goes medieval on them today. Starts clipping it, and then the guy's live streaming, and
It's a 6-hour live stream.
yeah, that dude. Yeah.
Yeah, but I'd still say Peru is like legendary, but that guy he has some calls that are just like ridiculous. Because at least that guy has a total return of 18%.
Mm.
Peru's, I don't know what that is.
Yeah, he said Andrew clip like he said like modeling is for nerds, and he just uses like whatever software that he finds online.
It's
Mod-
Oh, can I give credit real quick to the Sasha Yanshin guy, who he actually did post his portfolio returns. His title and thumbnail were clickbaity on a year-to-date, bro, but he actually showed his total returns.
Ooh.
And he annualized returns. Oh, if you want to check out the video, check it out. His annualized returns were negative 2-point-something%
this year.
No, annualized. His annualized returns since he started.
This?
Yeah. Go down, go back, go through. That's his year to date. It's towards the third quarter of the video. I don't think it's this part. I think it's a little further ahead. A little even further ahead. Sorry, fourth quarter maybe.
Did that?
No, wait, I think we went too far. Never mind. Yeah, it's in the third quarter. So I remembered, I think, correctly.
Okay, right, let's.
Oh, there it is. Oh, it was right there.
Oh,
okay. So it's going to be later in this part, but he's showing here the 2021, 2022, and 2023. Then he's going to show you the full calculation of what it is annualized. But there it is. Boom. So yeah, the portfolio value did increase, but he tells you because of contributions. So contributions accounted for the and one thing to do. So he kind of does something like what
is this a joke?
What?
This is seriously how much money he has?
No. So I was about to explain. So I remedy this by showing $0 figures in the personal holdings. He did it by emulating his portfolio with a paper dollar amount that's relatively low. So then you don't know what his dollar amount is in his portfolio, but he claims this is everything that he's invested in personally, but the dollar amount's fake. And so he put like a couple $1,000s. It's not like he wouldn't put like millions of dollars fake. It's like a couple $1,000. It's supposed to replicate the percentage allocation of what his portfolio makeup is.
So he has negative annualized returns.
Annualized returns negative 2.20%, and he's total down negative 4% since he started.
Oh my god! Oh my god!
And then had you invested in VTI when he started, you would be up 10.64% with an annualized rate of return of 5.23%. Oh, and let me explain why to everyone. This is actually incomplete because in addition to that, you might want to see like what is the max drawdown to kind of gauge what the volatility is. The reason for that is it might not be you that does it, might be someone else that does it, but let's face it, volatility, I don't express it as a form of risk, but I express it as a form of risk to yourself of doing something stupid, because everyone says they're that guy that's not going to be affected psychologically. But if your portfolio is down 60% in a year, 50% in a year, the likelihood you do something stupid is going to be pretty high because you'd be understandably under duress.
You know what, Sasha? I really want to make a video. I'm pissed. I'm fucking pissed now because he was such a smug. I'm gonna swear a lot. He was so fucking smug when he made this video. He thought he was so smart making this why dividend sucks. It pissed me off because he sounded like an idiot. And I even responded. It's my other channel, so I don't even know if I could find it. But
Big Barber Show says I'm mad too. He's feeling the energy.
He is such. He's Sasha. You're just as bad as Paul. You're a fucking smug prick. All right. And This video was embarrassing, and I fucking let him have it in the comments. I can't find it. It's my other name. And he thought he was so smart. Let's bash dividend investors. Why? Because they're having a good year in 2022. So I'm going to rain on their parade, even though they're outperforming the market. But
Yeah,
I'm Sasha. I'm so fucking smart.
You're making everyone angry in the chat.
I'm so pissed.
They're pissed with you.
He is entitled, smug, and he was so proud. Well, go watch this video. He was so excited to make this I hate dividend video because I'm Sasha. I'm smarter than you, and I'm a better investor than you.
I haven't seen that video.
See this, Sasha. Really? Minus returns. You're so much smarter than me. Oh my God, I'm just a dividend clown. Okay. Holy fuck. Oh, let's go. Oh, let's look at McDonald's. Oh, that's right. My best performing stock, my biggest holding, outperformed the market, Sasha. And guess what? The dividend stock. Like I don't even know what to call him. I'm like pissed beyond belief.
I'm just laughing because people in the comments are just
so mad
how mad they are.
He knows who I am too. I know he knows who I am because I've commented on the idiocy of his fucking videos. All right, let me hold on.
I think he knows. Yeah, he knows who the whole rabble crew is.
Okay, here's my comment. Okay. Let's read this. This will be fun. All you speculative tech investors think you're so smart trashing dividend investing. Why don't you go keep losing money buying Fiverr or Palantir? My dividend growth investing has done amazing for me in the past decade, and I get higher dividend payments year after year and price appreciation. Dividend investors outperform everyday retail investors who pick stocks all day. We don't chase yield. That's only what newbie dividend investors do, and they learn quickly. There are plenty of amazing growing companies that provide dividends to investors that can be rewarded with a distribution from the company as it grows. You'd rather have companies that waste their money buying other businesses that don't produce any good return on investment. That's what Sasha does. He's a trash investor who also shared dividend buybacks. Oh, let's see. Yeah. Dividend buybacks can be tactically done, but because in the video, he was saying dividend buybacks are always the answer compared to dividends. Like he's so fucking intelligent. Okay. This is garbage video. So his response, ha ha ha. Unfortunately, as you said, it hurts feelings when facts smack you in the face. Everything I said is based on math, blah, blah. Oh, God. Glorious. I love it. He was so happy. Thought he was so right.
They're saying respond to him now.
How about those apples, Sasha? You like that? How about that?
Respond live.
So let's get this. My speculative Disney investment. I'm just fucking around my speculative account. I'm up like what 15% on my Disney investment. So that's outperformance on Sasha's. My mattress outperforms Sasha.
Yeah.
My mattress with cash. I don't have that, but
look at that drawdown. So you're up 60. You're up 33%. Oh, by the way, he calculates an annualized rate of return, which I think, no, you shouldn't do that. So that for 2021, you don't do that. I get why he's doing it, but no, not necessary. You could still just do the rate of return since you started. And I think that's fine. Not necessary. But anyways, because it makes it look really good. That's not actually his annualized rate of return. Just keep that in mind. He actually just made 33.41%. We don't know what it would have been if he had started in the beginning of the year. That's an assumption. You're now taking a leap of faith there. And saying what the annualized. I do the annualized rate of return when I am judging about selling like a company that's about to get acquired. I'll take into account what is the annualized rate of return if like I hold versus I don't. It's like an opportunity cost thing. But this is different.
I hope people can underappreciate. I'm maybe the Costco video and the one I just said on Pfizer. I'm just trying to make people appreciate when you say dumb things like this is wrong across all spectrums of investing, whatever it is. It's like it's unintelligent and like you can do better. And it depends is the answer. Depends on what you're investing in. Like to make broad sweeping statements, and then people like Sasha is like convinced that dividend investing is evil. So he's going to make clown videos. He'll never like appreciate anything about it. He'll just, I guess, underperform buying Fiverr. But Sasha, let me do you a favor, buddy. There you go. You want to be a growth investor. There you go. That will do wonders for your performance, because that's how I am a growth investor. That I don't buy tech companies. This does it for me.
By the way, Strongman
Doing
told
you
me
a big favor, Sasha. Oh,
he had stopped doing stock videos. He's all of a sudden starting because clown
he's doing
market is
again.
turning.
Dude, his
Yeah.
Fiverr. Did you ever see his Fiverr video?
I saw his Pinterest video, and that already told me that this guy
I
doesn't
went
know what he's talking about.
once he did that dividend video. I went to see what he was investing in and to respond, and I'm like, oh, this guy buys. He bought Palantir and sold it before it ran up. To be clear, he got nothing out of this year's run of Palantir, and then he had Fiverr. Got wrecked on that. He got wrecked on a bunch of speculative, unprofitable tech companies. Like, that was his thing.
Pinterest.
Yep.
He made up some calculations on Pinterest.
Let's see. I just agreed in because I could say Paul is wrong across every kind of invested. Oh, you made my day. I'm so happy that he put that out there. Because just like I kind of was on to Sasha the last 2 years. I'm
Hey,
like,
he's fair game to make videos on. I have just like
he looks like he has the accent. He sounds intelligent. He does good production in his videos. And I'm just
I don't think he sounds intelligent. I don't know.
People say that, but I'm like, I look at him, I'm like, dude, like, what are we doing here? Like,
wait, do people say he sounds intelligent?
Then I'll just make fearmonger videos now, is what he does. And
I think he just sounds angry. That's what I get. I get Sasha's angry.
Sasha,
yeah,
you must
angry.
apologize to me. Here's the video, the dividend. I want you to go to this dividend sucks video and you apologize for the shenanigans and the bullshit with a negative freaking return, and you want to make fun of dividend investors. Guess what? Ryan Williams doesn't have a negative return. Ryan Williams doesn't. He's had years that he beat the market, actually, when he shows. Not every year, but he has some years. So, okay, cool. Wow, you hate dividend investors because they beat
I think, yeah, he's annualized 8%. Ryan Williams, I think he showed his annualized returns per his broker. So it's per his broker. So I'm not going to question it. Charles Schwab, I saw it because I know that's the Charles Schwab layout. I think it showed 8%, and he's just underperformed the market by about 1% over the same period.
Like Ryan Williams crushed this investment a lot. That's why I look. Is there, if you're a YouTube finance person, do you ever put out a video about an investment and then it does well, right? Ryan Williams has done that. So to like say he's a clown, some people, I disagree with you. Like, he's actually performed. I've seen it on his videos. He put out a thesis on Williams-Sonoma, bought it around like the 120s, and now it's almost $200. So there's evidence of performance. But if you want to go believe Sasha Yanshin, there's proof of underperformance, and he hates dividends. So I guess if you hate dividends, you're going to laugh and agree with him. He's an underperforming clown. Another one, Ryan bought KRC right with you. You know, he was I think in about the same time. He was buying KRC last year. So he's done well with that. I was talking to him in a live stream about it. But man, Sasha. Oof. Now I'm not going to make a video on this now. I'm going to swear too much. I think he did dirty, though. That's my thing.
Well, I think you should do a video on it.
Maybe. That I can't explain. I'm every time I look at this video and his stupid thumbnail. Where is it? Shut up, you. That is the dumbest. Sasha, that video is so stupid. You should delete it right now.
Does he advocate for buybacks instead?
That's what he kind of does in the video. Like, he does the whole like taxes, share buybacks, superior, Doug. Like, I just did 2 videos. Like, Costco shouldn't do share buybacks. Pfizer shouldn't have done share buybacks a year ago when they had the cash, I would argue. So
I think I've done the dividend community justice on laying out the argument, what they could use to argue why dividends are superior. And I don't see any of the dividend antagonists actually making counterpoints to that, because I don't think there are any.
they just completely investing is about people, not just math. Like, they just look at dividend investing as math, and they, oh, look, you have to pay taxes. It's inefficient. The share price doesn't, or you know, the share price goes down. So they just look at it like Paul, like just the numbers. It's like, okay, dividend investors buy and don't get out of the market, and they perform. Like,
Well, people always forget. I don't know why this keeps being brought up and misunderstood. It's like the stock goes down not because there's like magic money leaving. It's because the arbitrage is closed.
yeah.
So the arbitrage closes on the dividend capture strategy. The ability for us to remedy markets today is so much better than it was 100 years ago. So, or even 50 or 60 years ago. And well, that's no 50 or 60 years ago, the arbitrage is probably already closing. Point is, the arbitrage is closed now. So that's the only reason why you have a market reaction the day of. It's not like just some random ass calculation on there. And then people make it sound like it's the value because the cash is going down. It's like, no, that can't be true, because the value of the business is way more than just the cash. There's plenty of instances where it's disconnected from cash. There are instances where you'll find when a company is trading at negative enterprise value. That shouldn't be the case then by that same argument. Now, a special dividend and a regular dividend payout, it goes down because it's the market closing the arbitrage. Otherwise it'd be free money.
Yeah.
And there would be a market player willing to exploit that. That's done.
And I'll pump go look at my videos. Like, go look at Costco and Pfizer. I tried to do like a decent, well-rounded. I looked at what they could have done with their cash in certain scenarios, and dividends made sense. Share buyback didn't make sense in both. I would argue in both situations that I looked at. I would say like dividends would have been the way to go.
Can I say one thing to another point for dividends? I think dividend hate also comes from people who've never owned their own business. So take Warren Buffett's advice on this, literally. Please think of all businesses, stocks included, as businesses you own, and then think of them all from that perspective. What would be the best way for your small business to return capital to you? Let's say you're the full owner of it. Oh yeah, well, I'm going to buy back stock. Okay, I don't know what that means. And dividends or distributions are a perfectly fine way of redistributing capital to shareholders that oftentimes leads to less shareholder destruction than buybacks. So I only say that with the asterisk, a buyback is only better if it's well executed. Good luck finding companies that execute buybacks very well over long periods of time. Most of the time, I observe companies botch buybacks. I think it's actually the rare company that will perform a well thought out and executed buyback. So,
let's see. Yeah, Fabio and me covered this in a different video, the academic paper. And that's the people that hate dividends will say dividends are irrelevant. It's like, okay, you're citing an academic paper that, well, we already covered that. Assume certain things that don't exist in the real world, and they made their assumptions.
Yep. And selling a stock, people argue at the same time selling a stock is the same thing as getting a dividend. Like, you can just sell the stock and it's the same thing as a dividend. It gives you the same effect. It's like, no. That makes no sense. Oh my God, that makes no sense. And the reason why you can think of that is like, that's an assumption, or that's ignoring that there's a different classification of asset in a company. Cash is not the same as property, plant, equipment. Cash is not the same as intellectual property. Cash is cash, and we value cash as cash. And then the remainder of the assets have some form of future life value or value in the future. Cash has presumably it's a liquid asset with current value, and so when we distribute a dividend, we're exchanging the liquid asset that has current value and zero discount on future value because it's in the present. And when you sell the stock, you're selling the entirety of the future potential of that company. So, look at
Like
that.
I've said before, like if someone doesn't want to be a dividend investor, fine. But like when I get to retire, like you could be a growth investor, but when you're retired, I don't see why you don't assets that don't pay you at that point. I don't believe in the whole 4% idea. Like, that's not in the cards for me. The idea of being forced to sell 4% of my portfolio to
No,
not doing that.
do the other way. Get enough capital together that the distributions of your investments.
Like if you had $1 million at like a 2.6 or so yield, and then you can flip a switch people like to like 5 in a responsible way, and then you're good. You can retire. You know, if someone was planning to do that, maybe. But so, yeah, I don't know if he's in Europeans. I didn't watch that video, so I don't know if he says it. I am not debating strongman on dividends. We've talked about it offline, but I'm not really
He
interested.
talked about it, and apparently strongman is a huge dividend investor.
He's a big dividend investor. What's his VT dividend? He's probably clearing 5 figures in dividends, I would imagine.
Is he actually? Is it that high, the yield? I thought it was like 3%. Oh,
I think VT's yield is like 2. It's more than the S&P. So if he's like, he's sitting on like $500,000, I think. I mean, he's probably clearing 5 figures in dividends a year. He's one of us, so.
He's one of us. All right, Dan. I'm gonna have to head out because I have to go to sleep, work in the morning.
Yeah, me too. It was fun.
It was very fun.
I'll do more. Later on. I'm not gonna. I want to savor all the piling on Paul. So we'll do them sporadically over the next bit of time. But the Amazon one will be fun. I can't wait to do that.
Oh yeah.
Do it in a few weeks or something, maybe. All right. Well, thanks for watching, everyone. So we will see you later on Jesse's stream or something. I don't know. We will see.